This is the stock price chart of Ola Electric. The company was listed in August 2024 at a price of 76 rupees, and from there, it hit a peak of 157 rupees in just a span of 10 days. But since then, its shares have been in a free fall. Just last week, it hit a historic low of 40 rupees, which is almost a 75% crash from its peak. And in terms of valuation, the company has gone down from a valuation of $7 billion to $1.25 billion in less than 1 year. This is one of the most dramatic falls of a new age listed company in India. A company that was started just 7 years ago in 2019 and promised to bring an EV revolution to the country. In its first year of selling electric scooters, Ola Electric made 373 crore rupees in revenue. This increased to 2,782 crore rupees in FY23 and 5,009 crore rupees in FY24. A phenomenal growth. But behind this rise in revenue and stock price, the company had many defaults in its business model and the way it ran its operations. And once these news started to come out, its stock price started falling. For example, last month when the company announced its results for the fourth quarter of FY25, it was so bad that its stock price fell almost 10% in a single day. So in this video, let's understand what's really happening with Ola Electric. What is so bad with the company's financials, and what is Bhavish Aggarwal doing behind the scenes to turn things around for the company? And before we start, I want to say that we are now part of Zerodha's 01 network. Ola Electric had a dream start, I would say. In January 2019, Bhavish Aggarwal announced a separate entity, Ola Electric, from his previous company, Ola Cabs. And in just 1 month, the company raised a massive Series A round of $57 million. And then it became a unicorn in just 6 months after raising another $267 million in July 2019. And the main reason the company was able to raise so much money so soon was because of the man behind it, Bhavish Aggarwal. Bhavish had spent the last 9 years building Ola Cabs into India's largest cab hailing company, and now he had even bigger ambitions. His vision was to make India a global EV hub, and Ola Electric was at the center of this vision. The idea was to build a full-stack EV company that would create an entire EV ecosystem. This included designing and building electric vehicles and developing batteries, software, and charging infrastructure. And this was an attractive vision. There were massive EV companies built around the world, but no one was seriously talking about EVs in India at the time, and this gave Bhavish a first-mover advantage. And all these factors convinced investors to take a bet on him, giving him hundreds of millions of dollars. Inspired by Tesla, he made Ola Electric into a direct-to-customer electric scooter company, bypassing the traditional dealership model. And this was a smart idea. Going direct to customers gave Ola two big advantages. Firstly, it improved their margins, as there was no dealership in the middle to take a commission. And Ola passed on this price benefit to the customers, giving them scooters at cheaper prices. Next, going direct to customers gave Ola Electric a chance to engage directly with the customers. They could take the feedback better and also control the entire customer journey. And this allowed them to manage their inventory more efficiently, as they could directly get data on how much customers are buying and which pin codes are doing better than the others. But the biggest attraction for customers was value for money. They were getting an exciting electric scooter for less money than the petrol scooters. And this made the sales go through the roof. In the first year of selling scooters, its revenue was 373 crore rupees. And this increased almost 7 times to 2,782 crore rupees in FY23, and then almost doubled to 5,009 crore rupees in FY24. Ola was a market leader in EV scooter segment with close to 50% market share in FY24. Things were going great for the company, and this is when it decided to go for an IPO. Kind of a perfect timing. Just days before, the company had announced its FY24 numbers. Its revenue had almost doubled and its losses remained flat. And this gave the retail customers confidence that the company is on a clear roadmap to turn profitable soon. The company was listed in August 2024 at a price of 76 rupees, and from there, it hit a peak of 157 rupees in just a span of 10 days. It's all-time high. People were excited about this IPO because it was the first pure-play EV public offering in India. Plus, its growth was phenomenal. But behind this initial wave of optimism, things were seriously going wrong for the company. Take a look at their quarter-by-quarter revenue in the last 2 years. If you see, there's a decent revenue growth in FY24, and also the losses are not out of control. And it looked like that the company can turn things around and soon become profitable. But if you see the results of the last 4 quarters, things have only gone bad. Their revenue has fallen sharply, plus their losses have gone out of control. In the fourth quarter of FY25, the company's losses have more than doubled compared to the previous year, and its revenue has gone down too by almost 57% compared to the last year. So, on one side, your revenue is decreasing, but at the same time, your losses are going up. This shows that people are not buying Ola scooters as much as they were buying before. Plus, the company is giving big discounts to keep selling, which explains the rising losses. And to deal with these losses, Ola's board has recently approved a loan of 1700 crore rupees. Also, without a clear path to profitability, such news of company raising debt only raises concerns for shareholders. Now, bad financials are just one of the reasons for Ola's stock price hit. There are even more worrying signs for the company. The main concern is rising competition, which is resulting in Ola's market share going down. See, when Ola started selling scooters in 2021, it was one of the first major players to do so. And this allowed the company to be a market leader in the segment and maintain 50% plus market share for a long time. For example, in June 2024, which was just 1 year ago, Ola's market share was 46%. And this has gone down to 19% in June 2025. And such a market share erosion is unheard of. And the reason is more serious players have now entered this segment. Legacy players like Bajaj and TVS have entered the market with a bigger war chest than Ola. These companies have a massive dealer network and a deeper presence than Ola. Plus, their products are now getting better with every new launch. It's fair to say now that Ola has lost its first mover advantage. Even players like Ather have gained a lot of ground in the last few years. And for the first time ever, Ather's revenue surpassed Ola Electric in the most recent quarter. The second concern for the company is product quality and service issues. All I had to do to see what customers are saying about Ola Electric is go to their Twitter page and see the engagement. Every post of theirs has more comments than the likes, and almost all of these comments are people complaining about the service delays or product quality. And this is the main reason, in my opinion, for a decline in its market share. See, the first cases of Ola scooters breaking down or catching fire were in early 2022. It's been more than 3 years, but it still looks like that the company hasn't solved these core problems. Also, the initial decision to go direct to customers is now actually backfiring. See, all these legacy companies have service centers in every major city, but Ola doesn't have this infra. And so the customers face weeks and even months of delays in their scooter service. Now, slowly Ola is building these service centers. Last year, for example, Ola said it has opened 3,200 new service centers and now has 4,000 of these. But the government is not buying it. In April this year, the government asked 2 agencies to verify Bhavish Aggarwal's claims of having 4,000 service centers. The service part is something that Ola has to solve ASAP, now that the customers have so many options to choose a scooter from. Also, if someone is spending, let's say, 1 lakh rupees to buy a scooter, which they'll use for 5, 7 or even 10 years, then service is the main factor for most people. And now all of these issues are worrying not just the small retail investors, but also the big institutional investors of Ola Electric. In June, for example, Hyundai Motor Company sold 10.88 crore shares of Ola at a price of 44 rupees. And this was almost 2.5% of the entire company. And around the same time, Kia Motors sold 2.7 crore shares of the company at an average price of 50.5 rupees per share. And these big share sales have really spooked the small investors, and which is why in the month of June alone, Ola Electric share price went down by almost 16%. So now what can Ola Electric do to turn things around from here? Well, firstly, the company has to seriously work on its balance sheet. There's this phrase I really like. When a company is private, it's about the vision and the people. But once it's public, it's all about the financials. So a retail investor does not care if Ola Electric was the first mover in this space, or if its scooters are really sleek and full of features. All they care about is revenue and profits, and if the company has a clear roadmap to get there. In the case of Ola Electric, the company has now launched a program called Project Lakshya, whose sole objective is to cut costs and move towards being positive cash flow. The company's goal is to reduce the monthly fixed burn rate to 110 crore rupees, which currently is around 200 crore rupees. And to achieve this, one of the main things the company has to do is increase its gross margins. See, in the most recent quarter 4, Ola Electric's gross margins were just 19%. Bajaj, for example, earns up to 32% gross margins on its scooters. Also, Ola is a vertically integrated company, which means they have the entire production in-house. So it's easier for the company to actually increase its gross margins. After the quarter 4 results, the company has said that its gross margins will increase to 28 to 30% in the first quarter of FY26, and then increase further to 36.5% by quarter 2 of FY26. And if this actually happens, Ola Electric will reach very close to being EBITDA positive. Also, the company has to hold on to its market share, which is declining rapidly. I mean, there's no point in increasing your gross margins if your sales volume are actually going down. The company has to maintain its sales volume and increase the gross margins on that. Another project which Ola Electric is working upon is Project Vistar, and its objective is to make its operations more efficient by dealing with all these service-related issues. The company has to really learn from these other players on how to build an offline distribution and service infra to satisfy customer needs. There's a reason that these legacy vehicle manufacturers are so successful and still alive, because they have spent years building relationships and winning people's trust, so that it's not easier for a new company to come and disrupt their market. And I hope Ola Electric learns from this. And finally, Ola Electric is working on a new product range, which is electric motorcycles. These will be available to customers from early 2026. And in my opinion, this could be a fresh start for the company, a kind of a second inning. See, the motorcycle market is much bigger than the scooter market in India. And if Ola Electric can deliver on its promises in this segment, that could be a real turnaround for the company. But before that happens, Ola Electric has to make sure that their Project Vistar and Project Lakshya are successful. Because it'll be really hard for the customers to trust your motorcycles if your scooters are breaking apart. In the end, I wanna hear from you. What do you think of Ola Electric's current situation? Do you think the company can turn things around from here? And also, are you looking forward to their bike launch? Let me know in the comments. As always, thanks for watching, and I'll see you in the next one.